So why are you here listening to me, right? So let me just tell you a little bit about myself, right? Because you don't know me, right? So I traded currencies for a long time, from like 1984 till 1997. I did that for Harris Bank, Northern Trust, and then I shifted over to sales and advisory. So I started writing the Bush Update back then. That's my research that I still put out to this day. But I was advising like the large institutional clients like More Capital, Soros. Those are the guys who were my clients for foreign exchange back in the late 90s and then through 2000. So then I moved over and just started writing research only. I was Bank of Montreal's global currency and public policy strategist. You can imagine that they needed somebody like that after 2008. So that's what I did for them. I went on my own back in 2013. And so you can get my research at andrewbush.com. I do have this radio show, which is really kind of fun because I get to interview great people, whether it's Deutsche Bank's Joe Livornia or whether or not it's the chief economist from the Senate Budget Committee, a guy named Bill Beach, he's on this week, or Chris Giancarlo from the CFTC. These are the type of characters I have on the show. So it's really pretty good, and they're one-on-one interviews, so they're not 30 seconds long. We actually get into the meat of some of these important issues that help guys like yourselves and traders and women here too. So keep that in mind. And lastly, I do strategic business communication. Why does it matter for you guys? Because I get to meet with CEOs and I get to learn their businesses. And that makes me a much better strategist because I understand what's impacting their world and how regulations play a role in these businesses that are running around this country trying to make money. So that all flows together. But that's not why you're here. You're here to talk about this, right? You want to hear me talk about what just happened. And this is what I think is so compelling in this country. I was just talking to Joe Guinan. I love this country for a number of different reasons, but it's so much fun, right? When we see a midterm election or any election that we see a major shift in the political spectrum. 2008 was one of those, 2000 was one of those, and of course the midterm elections just happened is one of those as well. So what we're going to do is we're going to run through the results. I'm going to run through just real quickly what this means for Congress, what it means for the House, what it means for the Senate, and what you can start to anticipate from the new Congress and how it may impact the markets. And then I'll run through a couple of slides just showing you some big treetops pictures of what's going on in the markets from my perspective. So with that, let's jump right into this and talk about these guys. All right, humor me. Everyone close their eyes for a second. What do you see? Should be a guy on a horseback with a Marlboro, cigarette, right? This is some of the most iconic Western music ever, and it came from the Magnificent Seven, very famous movie. Actually, it was based on Kurosawa's Seven Samurai, but we call these guys the Magnificent Seven. Why? These were Democrat senators that were swept into the Senate in 2008 with President Obama, right? These guys are blue senators in red states. And the reason why I say that is because they're in states that Mitt Romney won in 2012. So coming into this election, we knew that these guys were going to be in trouble for a number of different standpoints. You look through, this is what this all looked like prior to the election, right? This is what we were anticipating. South Dakota, with the Republican there was up 12, West Virginia up 17, Louisiana was a toss-up, North Carolina, that was a toss-up, Arkansas, that was pretty strongly Republican, Montana as well, Alaska, that was a toss-up. Of course, if we flash forward to today, right, what do we know? We know South Dakota went red, all of these went red, Louisiana will go red. And of course, the big pickup too with this was that Colorado went red as well. So what does that mean? That means you got 54 Republican senators, and you only have 46 with the Democrats. Now that has important implications from a number of standpoints, including 2016, and I'll get into that in just a second. These are what the numbers look like kind of overall. These are a little dated, but it's 54 to 46. We just had, obviously, Alaska announce Begich won. Begich lost there and Sullivan won. In the House, I think it's 245 to 183, something like that. So why does this matter, right? Well, just to give you a little insight in how this government works, right? In the House, it's winner take all. You have one more vote than the other guys, right? You can jam through everything that you want, basically. You can create legislation, right? You can write the bill and show the other side the bill 2 days before you actually present it to the floor for a vote. That's how the House of Representatives work. Now the Senate is a very different game, right? You have to get to 60 votes Otherwise, you can't cut off debate for a piece of legislation that comes through. So it's much more collegial, you have to cooperate, and so on, to an extent, right? And I'll get into that in just a second. The reason why this is important, though, as well, is because if you control a House of Congress, right, if the House of Representatives is yours, or if the Senate's yours, you have the majority in all of the committees, meaning you get the majority of the seats that are there. If there's 22 people part of the Energy Committee, you get 12 of them, the opposition gets 10. And what does that mean also? It means you get a lot more funding for your staffs as well. So you can do a lot more research, you can bring up, and you get to call all the guests you want, all the people that are going to testify in front of Congress. You get to set the agenda for all of these. And that's really important when you're looking at things like regulations. It's very important to have that capability in the gavel, as they say. So that's what's at stake when you're looking at Congress. And if you think it doesn't matter, we'll get into that in a second. Yes, President Obama has the veto pen, absolutely. And does he have the executive order pen? Yes, he has that as well. But I will tell you, Congress is designed, and our government is designed to offset each other, right? We have the three branches of government. But within this power-sharing arrangement, we're getting back to what I would call a more normalized situation where we will have things starting to flow between the two houses of Congress. And that's a very good thing. So with this, one other thing I want to point out, obviously we live in the great state of Illinois. Maybe some of you commute from Indiana, I don't blame you. We're in the worst run state in the union, according to the ratings agencies. We have $100 billion of unfunded pension liabilities. We also have $56 billion of unfunded health care benefits for our retirees. Just as a reminder, we ask our retirees to pay what on health care premiums? Zero. Zero as state employees. That includes educators as well as the guys out moving the snow removal trucks. Sorry, I had to bring that up. It's kind of cold outside, so I toss it out there. But the fact is, that's not a great way of doing things. We also have all of our employees, state employees and educators on defined contribution or defined benefit plans, right? The most expensive form of benefits out there. No one does this. Illinois is one of the few. Oklahoma just switched over to defined contribution, and Michigan switched over in 1997, and they've estimated that they've saved themselves somewhere between maybe $3 to $5 billion already for new enrollees. So you can understand the depth of the problem. Governor races, Rauner won. Obviously, that was a major shift for Illinois. Overall, the Republicans took a net 3 of governorships, and that's important for a number of different reasons, but it's important for setting the agenda, again, for these states. And just as an example, out in Kansas, Brownback, who won there, they were making this as a referendum on his tax cut policies, right? Because they hadn't worked great as far as creating economic growth. And so the Democrats wisely chose to go after him. He won, just as an example. So all of this kind of winds together. It tells you that this was what we call a wave election. Anything that was close blew out. And the best example of how this translates when you have a wave, in Virginia, in the Senate race, it was won by a Democrat. And that Democrat was ahead by 7 to 8 percentage points in every poll that we saw leading into the election. And how much did they win by? Less than 0.5%. Every race really went the Republicans' way. Every race broke that way. North Carolina is another great example of that, where it was neck and neck, but it eventually was won by the Republican with about 5 percentage points. And this is what we call, again, a wave election. So why does this matter? What are we going to get out of this new Congress? Well, key changes in leadership. As I said, when you win, one of the houses of Congress, right, you get to set the agendas, right? And so if we look at these things, we talk about the key changes in leadership. One of the things that you're going to see is in the House, right? Paul Ryan, while it didn't change from Republican to Democrat, Paul Ryan is going to move from the Budget Committee to the Ways and Means Committee. And that's really important for one reason only, and I'll get to it in just a second. The next, you can see Orrin Hatch is going to move to Senate Finance. Shelby's going to take over banking, so think about too big to fail, all of those regulations with Dodd-Frank. That's where he'll be able to set the agenda. Also in the Senate, Murkowski's going to take over energy. Keystone Pipeline, think the ability to export oil will come up. And finally, Inhofe is going to take over armed services. That's going to be really important as far as changing the focus of foreign policy. So let's talk real quickly about what's coming up. All right, so the key shifts that you're going to see are regulatory remission. And while that doesn't sound really sexy, I will tell you it's super important. As an example, again, going back to who takes over chairmanships, Jeff Sessions, who's the junior senator from Alabama, is going to take over the Environmental Committee. And he is targeting the EPA for their CO2 rule. Now, why does that matter? Anybody who trades coal mining stocks, anybody who trades coal should be very excited about that, because you're going to see a lot of price movement once that starts to occur, because the CO2 rule puts a huge burden on coal mining companies and puts a huge burden on coal-fired power plants. So you want to keep an eye on this. They will, through their oversight capabilities, they can bring heads of agencies up to Congress and make them testify week after week and ask them to come through with all sorts of reports and things that they should be doing as well, right? Reports on the impact on business of your CO2 rule, impact on business of a change in a regulation, right? As a matter of fact, this week on my radio show, Engage, I had the chief economist from the Senate Budget Committee, Bill Beach, on. And they're estimating that regulations cost the U.S. economy somewhere between $1 to $1.2 trillion. So regulations really matter, and we've gone way to the far side of putting regulations on the U.S. Economy and incredibly increased the burden on U.S. businesses. It is small wonder that we have as little growth that we do with these regulations, specifically Dodd-Frank and ACA, the Affordable Care Act. The American Action Forum estimates that those two new regulations alone cost the U.S. economy between 2012 and 2013 $350 billion. So in an economy that's growing 1.5% to 2%, hey, you take $350 billion out, that's not a good thing. So that's going to be a lot of their focus. So you're going to see guys up on Capitol Hill all the time, and that's how you slow things down. You drag them out, you make them justify what they're doing with these regulations. By the way, just so you know, like in the budget of the federal government, they don't have a place for the cost of regulations. They don't estimate it. They don't take into account when they're putting new regulations on. And that's something else that's going to be coming from this Republican Congress. They're going to try to change the way that we do budgets to make sure that you include the cost of regulations. I mean, there's certain regulations that make a lot of sense, right? Speed limits, some other things like that. But the thing is like when you make these regulations, you really got to know what the cost is, right? If you just say, well, this is a great thing, everybody should breathe clean air, we're all like, yeah, that's a great idea. But how much does it cost, right? How much clean air do you want to have? How much clean water do you have? What's acceptable? And how many jobs is that going to cost? Those are the questions we need to answer as a society, and we're not doing it. So that's something else that the Republicans are going to try to bring up, and I know that they're going to work on this. The next thing I would say, you're going to shift the foreign policy focus. Obviously, the situation in Russia and the Ukraine continues to be very heightened at this point. We just heard today that NATO confirmed Russian troops are moving into the Ukraine. We know a column of tanks went in there. So we know that the Republican Congress, with John McCain with the gavel, or Inhofe with the gavel at Armed Services, they're going to be bringing these generals up and saying, what's your strategy? What are we doing here? They're going to do that not only for Russia, but they're going to do that clearly for ISIS and what's happening in the Middle East. So you're going to get a lot of discussion there about this. We're also going to get a lot of discussion on how to handle Iran, because obviously Russia and Iran have this wonderful relationship going on right now, where Russia is going to provide, I think, the materials for the Iranians to build 5 nuclear power plants. So that is a flashpoint as well. The Middle East remains a flashpoint. This is something that they're going to focus on. And why would that matter for you guys? Because if they force the Obama administration to take a much tougher stand, you'll see more uncertainty in the Middle East. Eventually, that'll translate into maybe higher oil prices, some risk premiums being generated for a number of different companies because of that. Obviously, we know, as an example, right, If you put pressure on Russia, what did they just do to McDonald's? They closed them, but they went after them with inspectors, didn't they? Health inspectors. That should sound familiar because it's exactly what China did when they wanted to put pressure on the United States. They went after KFC and McDonald's. These are two iconic companies in the United States that if you want to get after the U.S. to change their policy, this is what you do. Well, you can expect more of that as the Republican Congress puts pressure on the Obama administration to ramp up pressure on Russia. So keep some of those things in the back of your mind. What other iconic companies are going to get hurt by this? Who's pulling out of Russia? That kind of thing. And finally, and this is my big thing, right? So I know that the House and the Senate are going to have a balanced budget. They're going to create one. Now, we haven't had the normal budgeting process in Congress since 2009. And just so you know, the last time President Obama presented a budget, do you know what the vote in the Senate on it was? 99-0 against. Everybody voted against his budget. And that's why he hasn't presented one since. And that's why we have these continuing resolutions that fund the government and keep it going, but they don't really make any decisions on spending, right? So it's really bad. As a matter of fact, we're going to have to, in the lame duck session, by December 15th, you're going to have a new continuing resolution to fund the U.S. government. So keep that in mind. That's a little bit of a flashpoint. My guess is that in the lame duck session, they'll be able to punt that to about March 15th. And by the way, that's exactly when we hit the debt ceiling, somewhere around in there, right? Maybe it's another 3 months down the road, extraordinary things that the Treasury can do, but just keep that in mind. Those kind of swirl together. Now, I think, let me just cover Keystone Pipeline. That's a layup. I think Democrats will vote for that as well. That'll get done. The other things that are more tricky is the healthcare reform, the ACA. Now, that has major implications for a lot of hospitals, a lot of companies that do business with Medicaid because it was expanded so dramatically under it. So you want to keep an eye on some of the related hospital stocks. Also, the medical device tax. That may get repealed, so medical device makers would benefit significantly from that. You may have already seen a pop in those stocks, so you want to keep an eye on those. The free trade pacts, that may get pushed forward. I feel like maybe 30–40% that would get done. Obviously, the Japanese just walked out on that because of the agricultural subsidies that they have. 788% tariffs on imported rice. Yeah, it's kind of a tough one for the U.S., so we want to change that. But this is the big one that's out there. Paul Ryan in tax reform. And I want to spend just a little bit of time talking about that. This is the most critical thing that's going to happen in the next 2 years. And when I say that, I'm not joking. Back in the 80s, when we last had reform, so we're talking about 30 years ago, it really helped the U.S. economy. Now, it wasn't perfect by any stretch of the imagination. And we've spent 30 years trying to make adjustments to the tax code to fix the problems that are in the tax code, right? We have the worst tax system on the planet. It taxes income, so it discourages work, and it taxes dividends, and so it hurts capital formation. It's the worst form of taxes that we can possibly have. Now, we also have in the news a lot of stuff about what with taxes? Tax inversions, right? This is the biggest thing that's gotten Congress's attention. Now, I guarantee you most of these guys in Congress had no idea what those things were until you saw Burger King go to Canada. Now, that should tell you everything you know about our tax code. The fact that Canada tells you how screwed up our tax system is. Now, we tax businesses nominally at 35%, right? Effective somewhere around 28%, depending on what connections you have, I think. But one of the big things that's missing from this, when we talk about inversions, is the fact that if you try to repatriate your profits from your overseas activities and sales, it's taxed at 35%. Now, that means nobody does it, right? That means that you get weird behavior like Apple issuing a bond. Why the hell would Apple issue a bond? They have about $50 billion on their balance sheet of cash. Well, they do that because they can't access it, because if they did and they brought it back, they would get taxed at 35%. So what do? They issue a bond so they can have those proceeds, and then they pay dividends off of that. Now, I will tell you that if you lower that tax rate from 35% even down to 20%, you're going to see a lot of money flow back in the United States because of that. I had a conversation with the CEO of a big biotech and pharmaceutical company, and he said, look, at 20%, we'll bring back all of our money held offshore. And that money right now is estimated to be, not for that company, but overall for big tech and big pharma, because those are the guys that have the most money and most sales overseas, it's estimated to be $1.7 trillion. That's a huge amount of money that could do all sorts of good things. I'm agnostic. I don't care if they buy back their bonds. I don't care if they buy back their stock. I don't care if they issue dividends, happy days. But maybe, just maybe, we stop the incentive for them keeping the money overseas and building plants over there. Incent them to bring that money back, let them build stuff here, let them do whatever they want to do with it in this country. Now, a big University of Chicago guy, so I think, I always think about efficiency. And yes, you can play games with the tax code, you can play games with balance sheets, and you can get access to some of the capital that you have overseas, just like Apple did, but it's really inefficient. Make it the most efficient possible and let companies do what they want to do and what they can do with their own money. That's what I say. We're also, by the way, really putting a big bullseye on most of our companies' backs here. Emerson Electric, they're very concerned about the fact that U.S. companies are much more profitable to their foreign competitors if they buy them. And it's because our tax code is so screwed up that once a foreign competitor comes in and buys them, they instantly become 15% more profitable, depending on the tax jurisdiction you're in. So keep that in mind. If the U.S. doesn't do something about its tax code, it really encourages foreign companies to come in and scoop our companies up. And that's much worse than an inversion, because when you get taken over by a foreign company, a lot of your jobs leave the United States and they go to that firm. So keep that in mind. So that's my big deal, tax reform. That's really what I focus on, and that's what I think moving forward is going to happen. I'm here to tell you that I'm pretty sure Paul Ryan is going to have a tax plan ready to go by July 4th of next year. And that's really good news. Now, Dave Camp, the former chairman of the Ways and Means Committee, which is the central tax writing authority of Congress, has already created legislative language and written an entire tax reform plan. Of course, everybody, roundly said it was terrible. To some extent it was, but that doesn't mean that Ryan can't build from it. And he will. So keep that in mind. That is a huge, huge thing for the United States. So that's what I'm focused on. I really, really think we want to keep an eye on Paul Ryan. Yes, that means President Obama would have to sign it. Now, that's the fly in the ointment, as it were. I don't think he will. But that's what this next slide's all about. So Chinese couples were really busy at the beginning of 2014. Do you know why? No, not changing the one child. No. 2015 is the year of the sheep. And it's a very unlucky year to have a kid. And of course, that means, yes, it's the start of the U.S. presidential race. Maybe it's unlucky to get nominated. I don't know. But by the way, I love this music. It's from House of Cards. I don't know if you've ever watched that show. It's fantastic. Kevin Spacey's awesome in it. But let's talk about what the midterm elections meant for 2016. Well, as you can see, this is a list, and I'll maybe you can't see it too good in the back, but this is a list of potential guys running from the Republican side. And it's almost even across the board of like 11 to 10%, and then it drops off. But it's Rand Paul, Jeb Bush, Huckabee, Christie, Ryan, Perry, and then it goes Rubio, Cruz, Walker, Santorum, and Jindal, I think. Is Rick Perry on there? Yes, he is. So the guy that's not on there, of course, is Mitt Romney, right? We don't know if he's going to run yet. He's a very popular guy within the Republicans. So who had a good midterm election? Well, obviously Governor Walker up in Wisconsin, since he won and has now won 3 times in 4 years of being governor up there. I think that stands out pretty strongly for him. So he had a very good election. And Chris Christie actually had a very good election as well, because Chris Christie is the head of the Republican Governors Association. And he helped all of those governors I talked about at the beginning get elected. obviously they took 3 more. So he's a very popular guy within the Republican Party. And he fundraised and he went out and campaigned with those guys, so they like him a lot. Now, that doesn't mean he's electable, but it just means that he's done a very good job. Who do I think, would do a good job? I don't know. Rand Paul is garnering a lot of attention, and he's fundraising quite well. He was one of the very first guys that went to Louisiana after the midterm elections and reminded everybody down there for the runoff election that they're going to have that Mary Landrieu voted with President Obama on almost every issue. So he's a guy out campaigning for Republicans right away. So he did pretty well. But here's my view on this stuff. I think it's so important for the next president, and for any president really, to come from the state house, to be a governor. Because when you're a governor, you have to do what? You really have to compromise. Yeah, and you have to lead and you have to manage, right? And you don't get that by being a senator. I think from my viewpoint, my own personal viewpoint on President Obama, he would have been much better as a president if he would have learned how to compromise. And he hasn't done it. And I don't expect him to do it very much in the next 2 years. And that's why I look for, whether it's Republicans or Democrats, I really want a governor to be the next nominee or to be the president of the United States. Because I think it makes a huge difference in the way that you approach the process. Bill Clinton obviously was one. Reagan clearly is another example. Even W was one, although that's probably not a great example. He didn't do so good. But that's where I think the rubber meets the road for these nominees. Now, the other, on the Democrat side, obviously Hillary Clinton is really important. She has about 63% of the polling data. Biden's next, and then Elizabeth Warren, Cuomo, Sanders, O'Malley. O'Malley was the governor of Virginia. His lieutenant governor ran after him and got crushed, obviously, and lost. So his star has fallen a little bit. But here's how to look at this, right? And let me just say something about Elizabeth Warren right now. She is firing up the left, firing up the base of the Democrats. She is a huge fundraiser. And people are not really too excited within the Democrats of seeing Hillary Clinton's name up there. But I would say this. If I was considering running as a Democrat for president, I'd absolutely do it. And I don't want to sound kind of too bad about this, but this is why. Hillary is going to be 69 years old if she's going to be president. And she's already had a stroke. These are the facts. They're known. In the 2008 campaign with John McCain and Barack Obama, McCain's age was brought up time and time again. In Reagan's second election, his age was brought up time and time again. It's fair game, because you're going to want to know who the vice president is. And in McCain's case, it was Sarah Palin, right? So that kind of hurt him, I think, a little bit. I would actually offer the other side of that he was never ahead or even close until he nominated or picked Sarah Palin for a very, very brief period of time. But that's the story behind that. So if you know a Democrat that wants to run, tell them to run, because you never know what's going to happen. That's a little bit cynical, but that's the way this world works. All right. And she's going to have to deal with this. I don't know if you saw this quote. I'll read it to you. Don't let anybody tell you that it's corporations and businesses that create jobs. Now, she said that over the last month. That is not going to endear her to the business community, is it? And it makes a lot of people quite nervous. It heightens a lot of the rhetoric that came out during the 2008 financial crisis and how big banks were the bad guys and business was bad. I don't know about you guys, but capitalism works really well. It's not great, but it creates a heck of a lot of jobs, and it's the best economic structure, and it's our structure that we have. Too often with businesses, they get slammed for being businesses. For whatever reason, this country has gone so far to that side of the boat that they don't look at businesses as creating jobs, as doing good things within the community, and so on. And so this kind of keeps that alive. Now, I don't know what everybody's viewpoints are. I'm a middle-of-the-road Republican, moderate on a lot of social issues. I really only care about tax reform. And I think Hillary, while she was a senator, obviously she was in the state house in Arkansas with her husband, Bill. So I think she would be much more likely to compromise. And I would take her, 9 times over 10 over Barack Obama as far as being able to compromise. So to me, it doesn't matter who the next president is in that sense. You're going to get somebody who's better than the current president when it comes to looking at tax reform. And that's probably the best news I can tell you about the 2016 election. Okay, so let me just wrap this up with this, right? 3 charts to remind you not to squat with your spurs on. If you've ever done that, it's kind of unpleasant. This is the S&P 500, right? And this falls out of a little bit of politics and money to some extent, but what I have here is a 2-year chart. These are just gray boxes showing the lows, and you see the pattern. Higher lows, right? With higher highs for sure, but higher lows until recently, right? And we just broke down there. And what has the Federal Reserve been telling us? Expect more volatility. Well, I will tell you that I don't know where we're going to go specifically from here with the S&P 500. I do know that that pattern is broken. And we're going to get more volatility. Now, it could be volatility on the upside. It could be on the downside. All I know is that I will be adjusting the way that I look at the market. It's not as easy as it was, right, of just buying and holding and knowing that, you leave a stop at, this level and you're golden because it never hit there. Right now, if you left a stop there, you got blown out, and then it's back up higher. So that's telling you there's more volatility. Here's another slide to show you more volatility, right? And I would make the case that regulations really matter, right? So I travel around the country. I talk to a lot of different groups. I do talk to trading floors quite a bit. And when we talked about this spike in the price of futures on a 10-year note, everyone said the same thing. There was no liquidity. Why was there no liquidity? Because banks are not allowed to do what they used to do. They can't inventory stuff. They can't step in. You have to sit there and go, I'm just executing. I can't hold as much as I used to. So there's not as much liquidity out there. And that is what the problem with this is. And that stems, to me, my interpretation is it comes from Dodd-Frank, because that's a major change that we saw. A 50 basis point move when you're at, where'd we go? 220 to 185 back to, 210 in the same day. I don't know about you guys. I chased it on the way down. I missed it. I chased it on the way up. I couldn't get it. So it wasn't a lot of fun for me that day trying to make money. But to me, coupled with what the Federal Reserve is telling us, expect more volatility, you bet. That's exactly what's going to happen. And finally here, when we're talking about energy, and just a real quick segment because I don't want to talk too much longer, but this is WTI futures. We peaked at 112, and I call that the dog that didn't bark, right? This is, of course, Sherlock Holmes' case where he solved the murder because the dog that didn't bark in the farm because it knew the owner, right, when he came in. And that's the same thing here. Oil did not shoot higher. It didn't bark when we had ISIS, when Russia invaded. None of those things happened. Why? It basically was telling you something's changed here. And here's part of the why. Since 2005, in the United States, we have destroyed 2 million barrels per day of demand of oil. Now, that occurred primarily because of the price spikes that we had in 2007, 2008, where companies were like, holy cow, I got to get a lot more efficient. But we also had the increase in the CAFE standards, right, for miles per gallon for cars. So we actually decreased our demand by 2 million barrels per day. People drove less, right? They stopped buying Hummers and so on. At the same time, you know what? The economy grew, right, once we got past 2008, and the population grew. So we actually should have been adding about 2 million barrels per day of demand. So we've really seen a 4 million barrel per day swing. That's just on the demand side. On the supply side, we've added 2 million barrels per day. That's 6 million barrels per day net swing that we saw should impact the market. And that's what I'm saying. That's what you saw here. So it's not surprising to me to finally have the market catch up a bit on this. Now we're questioning whether or not the shale revolution can continue at $75 a barrel. What can happen there? And that's really important to keep in mind. Now, I will tell you this. We are speeding up the approval process for LNG terminals to be built to export liquid natural gas. That will help natural gas. That will also help shale exploration as we get natural gas from that. The export of U.S. oil, the lifting of the ban of that, will also help U.S. production because we'll send a lot of that over to Japan and China, which is great for our domestic producers. So I don't subscribe to the fact that like these shale wells are going to shut down anytime soon. I think we're going to continue to see production. I just don't see oil ever going back to $100 a barrel unless there's a nuclear war. I just don't see it at this time. And by the way, miraculously, after the Illinois election, do you know what happened? The very secretive little rules committee within Congress of Illinois, state legislation, approved fracking rules. Take a look. There's a huge deposit. I think it's called the Alson deposit down in southern Illinois and in Indiana. That will eventually be developed. That will create jobs. And that, again, will bring some supply on. And just one more thing about WTI, and then I'll stop. We'll have questions after the CME guys talk. But Mexico. I want you to start thinking about Mexico. In 2015, they are opening up leases, right? Okay, here's a fun little stat that you can share with people and be really smart. 30% of the Eagle Ford shale deposit, right, which is in Texas, 30% of it is in Mexico. There's not one rig on it. So keep that in mind, all right? The United States has 470,000 kilometers of pipeline in the United States. Mexico has 13,000. There's huge opportunities down there to help the Mexican government with creating energy. So I think that's something that when we look at oil, we look at energy, there's things like MLPs that are just going to keep coming because there's going to be need for that infrastructure build out in Mexico. So there's definitely going to be some opportunities there. All right, why don't I just leave it there, and then we'll get back to the CME, and they can talk about some of the things, interesting things that they've seen from spikes in volumes and different products that they have.